Okay, picking up from where we left off here on the 15-minute chart again. There's not a lot of that you can see here other than this inverse head and shoulders. I will say that a pattern that fails does severe damage in the opposite direction. So it could just as easily drop 50 to 100 points in the opposite direction if a pattern fails like that. Now, will it? We just don't know at this point. So let's look at some of the other charts from other people. Let's see here. This is Cobra's. Let's see. We're going to go back. One thing I did want to cover here from last week, just to keep this in your mind. Cobra hasn't updated these yet. Maybe he will the next time around. The institutional buying and selling. Again, when you look at this is a week old now, but you can clearly see that they are dumping this market. They are not buying yet. They're in dump mode. And that is a big change from what it has been all this time back to March of this year. This high is as high as March of last year, of 2009. So that is something to consider, that they are selling right now. They are in sell mode. So any rally that goes up is not going to be very large because of this, because they are trying to unload their shares. The big boys, the institutions. Okay, when you look at the other chart again, we covered this last week. Maybe Cobra will put a new one up soon. That was Thursday from a week ago. You can clearly see all this time back here, March of 2000, all this is your taxpayer dollar from the federal government printing money out of thin air, throwing it into the crooked banks like Goldman Sachs and J.P. Morgan, and they're buying up the market, giving everybody a fake idea that everything is great in the economy while you and your neighbors are getting laid off. Well, they're sucking the money out now because they've got to. They've been forced to. Probably the Chinese and every other country in the world is tired of buying their debt. So they're sucking the money out. So who is left to really produce this rally up? That you got to really ask, if you're thinking that this is going to be a long-term bull market, that we are really going to go up and put in 13, 14,000 or more on the Dow. I just don't see it. It's just not likely to happen. We might put in another higher high in the next month or two, but after that, I think we're done. We're going into primary wave 3. Let's go over Tony's charts here. And we can kind of see the same thing here with Tony's charts. Same scenario here. You can see where it crossed right here, and the MACD histogram towers right there, they rolled off. You got the cross. Pattern looks similar. Up, down a little bit, up, down a little bit, up. Sideways consolidation. Kind of gives you the idea it's a bull flag. What it do? It failed. Boom. Rolled over and failed. We're at that same point right now. The difference, of course, right now is if you look here at this point, we were actually oversold on the RSI up there, which is amazing that we still tanked. Here, we are not. We were clearly in oversold in major bear territory there, which I'm surprised it pushed it down that far, but that just goes to show you when you're really deep down there, can really get more oversold than you can imagine. But we are still below the 50 here, coming in at 42.21 and pointing down. So we could very well go back down here and tag this 30 and then roll back up again. And that would kind of put in a positive divergence on the RSI, meaning this could be a final bottom before there's a significant rally. Now, Tony, I believe, is bullish that this is a bull market. That from what I've read, he's bullish, but he's an Elliott wave guy, and I disagree with that. I think this is just a bull rally inside a bear market. That's all it is. Primary wave 2. As you can see, here's daily chart. Same scenario here. 2 histogram bars that are putting in a positive divergence. If you draw a line, wanting to hook back up, wanting to push it up, but rolled down there into the close the last day of the week and pointing down, still below 50, still in bear territory. Same thing here on the weekly. You can see we are still rolling down on the weekly, and he's got different time periods. He's got the 13 and the 34 extended moving average, and we are still below both of those as well. And we are now below 30. We are coming in a reading of 29.71. That is very bearish on the weekly chart. Very bearish. This is major bear territory. So on a weekly basis, we should have another negative week. There's no question about it. It should be coming. Looking here at the monthly on his charts, you can see the way he's got this count. I'm not an Elliott wave person. I'm just going by the technicals again. But I see us on the monthly, we just crossed 50. We're at 48.22 right there, below 50. And this is not crossed yet, but that'll be the kiss of death. You can see a lower histogram tower bar there, showing that the monthly is getting ready to roll over. That doesn't mean it can't roll over and go back and put in one more high and then drop like a rock. But I think we're done on that. I really do. Let's go over here. I was reading Alpha Horn's charts, and he is short, comfortably short, and I am too. I'm short the market as well. So, and he is basically looking for a lower low too, if I'm not mistaken, and he's looking for possibly a little bounce. Just speculating there, it could be like that, and then a bounce down here, then maybe back up, and then another lower low, I believe, if I read his charts correctly. And we look at the other one here that he has, and this is kind of the pattern that he's seen. Puts us again down here with another lower low. I would say that's around the 1,000 mark, if I'm not mistaken. So he's looking for that possibility as well. And that's what I'm looking for. He did send me a nice print, a nice fake print from last week. He cut this. Now if you see that, this was when we were at 10.95, a nice fake print down to 10.60 something at 2 p.m. So you tell me. I think that's where they're probably going to take it at some point next week. Don't know when, but I definitely think that's going to happen. Okay, this is just someone who sent me some stuff about turn dates, time, measuring the actual time between these. And as you can see, basically the time period, the difference between the all-time high and the low here at 666 is matching up right now with June the 4th. So for those of you out there who are on the ritual side, like myself, and believe that the market is controlled and that they like to play these ritual games, this is time cycles. So literally measuring the days from one high to a low, and then from a low back to another high where they dump it. That to me tells me that something's up here. But you be the judge on that yourself. Okay, let's see. Let's go to some more charts if I can get to them. Might have to go to do another video. Man, I really hated to do that, but I'm talking too much. Shankly's monthly chart right here. I again really wanted to see us come down here and hit this 988 moving average. We didn't hit it on the monthly, but maybe we will tag it next week and then start a rally back up. But I really kind of expected that to happen before we get any move back up, and I actually think the move back up will be contained. I don't know if we're going to get a higher high or not at this point. I don't know. It's possible. And let's see some more charts here. Here's the Dow. As you can clearly see, it is below. On the daily, it is below its 200 moving average, which is also the 40-week average on the weekly. Numerous days here. This is going to be tough resistance. I believe they're going to have to gap it above it to get above it. I really do. Could they do that on Tuesday? Absolutely. Absolutely they could. So I think that's about it. I think that covers about everything. One more thing. Here's the dollar chart from Dan Eric. As you can see, this is pretty steep of a channel, but is it possible? Absolutely. With what's going on right now with Europe, it's absolutely possible. Okay, I'm going to stop this video, do one more, and cover some other stuff. Thanks.